Welcome back to Wealth Quest, and of course we're discussing property and the outlook for 2012. Before the break we took a look at three various markets, of course the US, Europe and Asia. Jamie, over to you. Let's do a quick wrap, and in terms of having exposure to these three markets, what is your view with regards to having a portfolio that focuses on all the markets that actually will give you the right returns going forward?
Yeah, I think if you just look at the US, I think the markets that are fundamentally quite strong, apartment rentals are very strong, the malls are trading well, storage sector's actually been really good, and then I think in the digital space is quite strong at the moment as well. It all depends on pricing. We think the US probably has run a little bit ahead of itself. Fundamentally it's definitely in a better position than Europe. We just think pricing's run a bit ahead of itself. There are certain names that we like, Prologis as well, blue chip industrial owner that we like. So we slightly underweight the US. Europe and the UK, there's obviously a lot of macro issues there. We slightly overweight the UK. We just think from a valuation point of view it stacks up. Europe, you want to be in the quality names with quality balance sheets and quality management teams. You don't want to be caught short owing a whole lot of debt or refinancing a whole lot of debt in the near term that you're unable to do. That could cause a lot of problems for you going forward. So you want to be in quality properties and you want to have solid balance sheets. And then in Asia, Asia's probably the market where we're the most overweight. Japan, actually we haven't spoken about, quite weak fundamentally, but the Japanese listed sector is trading at about a 8.5–9% forward FAD yield, which in a market where the 10-year government bond's below 1% is, you've got huge yield spread there.
Yeah.
Hong Kong and Singapore, we like the pricing there. And then actually Australia, we've gone overweight as well. Just pricing wise, it's very attractive. A counter like Westfield Retail Trust, your dividend yield's over 8%.
Yeah.
A market where your bond yield's 4%, and Westfield Retail Trust is the best retail in Australia. So
okay, so
8% yield with a little bit of growth going forward is attractive to us.
Fantastic. We'll have to leave it there. We're going to turn our attention now to our weekly fund focus.